Now, Filatex India reported a 9% rise in revenue from a year ago period. Margins, however, contracted. Rise in crude oil linked raw material prices impacted demand and utilization levels. Let's welcome Madhusudan Bhageria, the MD of Filatex India, to take a few questions. The stock is at the day's high, is up around 6% as we speak. Mr. Bhageria, good afternoon. Thank you so much for joining us. You know, crude oil is one of the most important input for you because of PTA and the other raw materials that you use for your own production. Things got better. Crude prices did come off, but then they're back again at elevated levels. Give us a sense of what that means for your margins going forward, and how do you work out in situations like this when raw material prices are really high and there are supply issue challenges as well?
Yeah, good afternoon. Crude prices do affect us, but not immediately the things happen, and we have a good control over our inventory and purchasing. And we are also able to pass it on to our customers in a gap of 10 to 15 days. So it doesn't affect us in the long run. But now the demand is good, so the margins have also improved. And going forward, I think it's a season till at least next March. Because of the winters, the demand for the fabrics and garments is quite high. And with the FTAs coming in, we feel that the margin should be there. And the raw material prices affect us in a very short term, but then eventually we are able to pass it on.
Mr. Bhageria, I know very two-part question from our end. Number one, give us the guidance that you've set out for yourself in terms for FY27, your revenue, your EBITDA margins as well as PAT. And number two, you have almost 700 crore of capex lined up. How are you funding this capex? What will the balance sheet look like post this capex?
Guidance for the full year, I think it depends on the crude oil prices on the top line. Mm-hmm. But I think we should be able to do around 46 to 4700 crores. Because we also have some plans of expansion which should be operational, some in September and some by October end. That will help us in improving the top line and also the bottom line. And as far as the guidance is concerned, I think EBITDA side, we should be doing whatever we have done last year. We should improve that by at least close to 30% in the full year.
Okay. All right. So that's about the guidance. But what about the capex plans, Mr. Bhageria?
Capex plan, yes. We have mainly 3-4 capex plan. One is we are adding some capacity in our existing plant. Half of that would be operational by September this year and half by October. So delay is slightly because of delivery schedules and the shippings getting haywire because of these problems. And the second is steam. We are trying to monetize the steam. That should also get monetized by September. And the third is we are putting a new plant in a company owned by Filatex only, Ecosys. So that should be operational by October. But yeah, that's a new product and a new technology developed by us. So it can take 4-5 months to stabilize the product and the coming it in full stream. But technically, it will be operational by end of October.
And how will you fund this?
One more is there is the automation. That's a very small thing. We are doing some automation. That will be also operational by September.
Okay. Mr. Bhageria, number one, what is the kind of debt you will raise? Number one, to fund all of this capex, almost 700 crore. Number two, you've said that, capex of 300 for Ecosys that you just mentioned. What is the kind of asset and EBITDA that you can expect from here? Do you have any already signed MOUs or agreements with customers for supplying this particular product?
Yeah. So the first project in Filatex, we are raising a debt of around 140 crores. Okay. Rest everything is through internal accruals. Okay. And in Ecosys, we have raised a debt of 200 crores. Rest is equity. And the debt, the turnover in Ecosys would be roughly 1 or 1.1 to the total investment. But the EBITDA levels will be in the full year when it's fully operational would be quite good. We expect a EBITDA of around close to 30% plus.
Okay, 30% plus is the EBITDA. Last question before we let you go. You spoke about price hikes. How often do you take that? You did say it happens with a lag. How much have you already passed on? And do you think if that continues, demand will still stay stable? It is the season, yes. But what happens if the price hike continues and crude oil prices continue to go higher?
I don't think it affects too much on the demand side because eventually on the garment and the fabric, it's a very, very insignificant effect. like a 10 rupee hike in our raw material would maybe result in hardly 50 paisa in a shirt or a 2 rupees in a sari, that kind of a thing, because rest of the things are normal. We are able to pass it on. We get a price every week in India from the suppliers, and we are able to pass it on in the next week subsequently. Whatever has happened till now, most of it is passed on.
Okay. Thank you so much, Mr. Bagheri, for joining us, giving us a sense of how exactly business is going on, your capex plans, as well as the guidance for FY27.